Cool.
All right, we're good.
Okay, I want to welcome everybody to our Micro Moments /CSE podcast. And we still missing a few people here, but Micah and I will get it started. It is, what is this, Thursday, the 5th of September. And you might want to check out our website, www.micromomenttrading.com. And you can find all kinds of stuff out about all our programs, all the CSE programs, the seminars, everything. You can also sign up for the free Cal Report, which comes out every Friday. It's got just tons and tons of emails in there from our clients, and then ask you questions, reporting performance, whatever. And then our folks, Randy and Mike and myself and Tim, answer those. So it's a real good thing to have. It's been published about 20 years. It's totally free. And that's, again, would be www.micromomenttrading.com. So check that out. And Mike and I and Tim had the session this morning, the once weekly or once a day session for the micro moment trading. Usually it's not usually, it's every day from 8:30 Central Time to about 9:30, what we call the first session. And they actually do trades in their own accounts, in our corporate account, which very shortly will be audited, and then they'll be doing everything in that account to justify these returns. We had a great day today. The returns for today were 26.97% and about 62% yesterday. So not counting today, we were up 88.88% for Monday, Tuesday, and Wednesday. So this would get us over 100% for the week. We've averaged in the micro moment program at the end of the 40th week, the end of the 39th week, which was last Friday. We've averaged 4,499.28%, or an average of about 128.02% a week. Just last week alone, we did 195.20%. Great program. And you don't spend a lot of time doing it, only about 45 minutes to an hour, 5 days a week, or you don't have to do anything one day. You're never in cash, you're never in anything but cash overnight, and you're never in a trade for more than probably 25 to a minute and a half. It's the max. So while we're waiting for these other folks, if they get here, why don't you take it over, Mike? One more thing. If you can, tell them how to use, how they can sign in and ask questions and stuff, Mike.
Yeah, so just throw any questions you have in the comment box, just like Martha did, under the YouTube video going on right now. And then Marcus, who's in the background, will be able to display them just like this. Martha says, Micah, how long should someone paper trade when going to a new platform? After your warning about paper trading, I went to my new platform quickly and am struggling. Yeah, so I don't think I was able to finish that warning about paper trading. What I meant was, I don't think paper trading makes you better at trading. I think paper trading is meant for exactly your position. When you have, which I mentioned, when you have a new order type you're trying, or a new indicator of some type, a new shortcut to make sure it actually works. Like first time you use trailing stops, there's so many ways to set up stops of every kind. You have to make sure that's right. That's when you use paper trading. When you're getting used to a new platform where your buttons are, stay on paper for as long as you need to really get comfortable with where everything is. I more meant people that, are learning trading, paper trade, and, they're not at one contract, and they just paper trade forever and feel like, because they made $1.5 million on paper, they can, take their $1,000, never having traded a dollar, and, somehow make $1 billion on it. It gives a kind of a false sense of security in that way. But when you're figuring out a platform, when you're trying anything new on that platform, absolutely paper trade. But when you're learning, I think you should trade one contract. We don't have per trade commissions now. And I think it's nothing but benefit to trade one contract. You're paying 65 cents in and out if you just opened your platform. and it's just a good way to go. So I hope that clarifies it, Martha.
Yeah, let me interrupt you real quick there. Marcus, I just got a text from Tim that he needs you to send him the sign-in link, please. He'll be able to get on. Okay, continue on that same line. We discussed this yesterday. Sometimes paper trading will let you get out for a bigger profit than maybe you if it had been regular trading.
Yeah,
and sometimes the reverse. So there's an alternative to that. Since we're doing these options and they're highly, highly leveraged, not with the use of margin or borrowed funds, that's how they are. You can buy you got to have one contract. Just do one contract instead of paper trading. And like Micah did one for Apple today for 76 cents. Well, that'd be $76 for one contract. And that's all you're risking is $76. And that way you've got a real deal, and it's not.
You're risking $76 if you lose the whole thing.
Yeah,
if you take 100% loss. Yeah, so it's so safe.
Which is going to be unlikely,
Yeah.
But that way you don't all of a sudden think you're really great or think you're really bad because the virtual trading is not exactly like the real thing. But it's so much better than it used to be. A long time ago when we started doing all this stuff, we told people not to use it because back then the platforms just didn't work. And so we would tell people do not use the virtual trading platforms. Just use a small amount of cash and learn that way. Don't risk a lot of money. So, but they did today. I think they did. We did 8 contracts today. Yesterday was a huge day. 18 contracts and 62.48% return for the day. And for example, yesterday Tim made 15.66% on a Q trade. That was the highest one out of the 18. And well, no, actually, in Apple, Micah had 15.85. Then they had 16 other trades, all anywhere from 1% to 7, 8, 9%. A couple of losses, 1% loss. The key to trading the micro moment, there are no rules. What you do when you attend their seminar in the morning, their session, they've got our proprietary chart up there, and that chart is telling them when to get in and when to get out. And they're sitting there, eyes glued on that chart, and continuously talking through the transaction. And then they'll say, "Okay, we're getting ready. We're prepping Apple, and okay, I'm getting into Apple right now for 85 cents." And then they'll let you know before they get out, and you can follow what they do. But at least you learn it. It's like going to trade school. You're learning a trade here. You're not learning a bunch of academic stuff and like day traders do, trying to figure out when stocks are going to go up, when stocks are going to go bad, company's good, company's bad, because we're using the indexes. We're using QQQ and SPY and Apple. Apple's not the index, that's the actual stock, but I mean, they're not going anywhere. And it makes no difference to us if you look at the pre-market and the market's up tremendously or it's down tremendously, we don't care because we're not trading that. We're trading volume. And when we see it's up tremendously either way, we know we're going to have good volume and we're going to be able to do make some good trades. Here's Frank. Hi, Martha. Hey, Frank, here you go. Hi, Martha. Are you using bracket orders? I found this last week or so, the fluctuations are stopping me out, even though the trend is right. So Martha, why don't you, he can see that. So why don't you type in a response to that, Martha? Tim, we'll talk to Tim while you do that, Martha. How you doing?
I do well. Hey guys, sorry I got on late.
No
forgot I have to use Chrome to get onto the podcast. Yeah. So doing well, but I've been listening and listening to your report, the great results we've been having this week. So
have you noticed something there in front of me and Micah and also in front of you, but I don't think it's in front of you. We all have.
Oh, here we go.
And what's there that way? Now we look like Walter Cronkite or something. What's funny about these microphones? This is not coordinated. I've had these things for several years, and then Micah got one not too long after we started doing the micro moment stuff. Now I don't know how long Tim's had his, but they're all the same microphone. So
yeah, they're awesome microphone, and it was amazing when you started using yours again. The quality went way up. So I'm glad you're using that again.
Okay, let me read Martha here. It says, "Hi, Frank. I used bracket orders due to so I guess past tense here. I used bracket orders due to some big losses. They're frustrating in this fast-moving market. I watched the option chain and the ice charts very closely and get out a lot quicker on losses. Micah, what do you think about Bortha's comment there?
That's a good way to do it. It's nice to have a total fail-safe in the case of there was one trade recently where I got caught in live on the webinar, and it was like a 22% loss. And it was literally, I was down in one update, not a minute, like from when the option price, the bid ask changed, because they change every, instant when it's moving quickly. In 2 updates, it changed, and that's all it took for me to be down that much. So I would recommend, an overreaching stop loss, something like, 10, 15% that's just kind of hanging out down there. You can program it in really easy. But Frank, if it's stopping you out too quickly, I just learned this probably 4 days ago. There is an order preference feature. And I don't know what platform you're on, but all of them have, order entry features. So you're going to go to your options, order preferences, and you're going to look at your triggers. There's 2, and the standard thing it starts you out on is single bid ask tick. So what that means is on your stop loss, if say you have a 70-cent stop loss, if it's trading at 72 or 73 and that 72 gets taken out, the next best bid is 70 cents. Now, all that is because the current contracts just fell out. It's not because it's actually trading down there. So it will trick the computer into triggering your stop early, like 2-3 cents early. It happened to me like 4 or 5 cents early. So if you change it, that's again, single bid ask tick is what it's called. If you change that to single trade tick, that causes the feature to only trigger if a trade goes off down there. So it actually has to, see an exchange happen at 70 cents and then it'll trigger your stop. That could be, it hit me like twice in a day, and in faster moving markets, it happens even more because everything's getting taken out. And it can get taken out faster than you can even see it because, we're working with computers here. They're a lot faster than us. So that is one thing I would recommend. Switch from single bid ask tick to single trade tick. So
okay, here's another question from or comment, a question from Frank Joseph. Looking at the candles, I see the wicks can be quite long, meaning a lot of price fluctuations in a short period. I'm going to defer that one over to Micah because he was discussing that today with someone, that kind of charting, and I'm not a big fan of that kind of charting. I'm the same old line chart guy, and so I don't know that much about him. So, Micah, what do you think about his question?
Yeah, candlesticks are good. I guess what's the question? Are you wondering if they're good to use or?
Yeah, you want to pop your question up there again, Frank?
Yeah, he just said kind of like.
Yeah.
Yeah, I see the wicks can be quite long, meaning a lot of price fluctuation. Yeah, that is what it means. The wicks are the highs and lows of that period. So if you're on a 1 minute, 1 minute candlestick chart shows the high, the open, the close, and then the low within that minute. So yeah, the bigger the wicks, usually the higher the volatility. That is true.
Is there any particular reason you guys look like ninja traders, all in black, and I'm over here in white? And Christine, looking. What?
I got to get a cool hat though. Since I don't have much hair left, I need a cool hat.
Yeah, for people attending this podcast, Tim, who's recently came on, about 3 weeks ago, and he's a permanent fixture now on the micro moment trading situation. He's on every morning, he and Micah, and they both work extremely well together. And he started off brand new, had a terrible time when he started off doing this, and then he just sat down one day and why don't you kind of tell your story there? Tell me your story.
Yeah, absolutely. No, when I started off, it about a week after I figured I knew everything there was to know about trading, just being lucky. And then got hit several times with some bad losses and decided to really learn what the charts are telling me and follow the guidelines that both Micah and Tony were teaching, and learn the pattern recognition. And once I started getting that down, I had consistent success and have been growing that success ever since. It's really simple, and every day we prove it. I think we have enough sample size since this micro moment trading has started to prove that this is successful. And to be honest with you, I hadn't done any options trading before June of last year, and jumped into this program after seeing the Cal reports and Joe reporting the results they were having every day, and started to notice that, wow, these guys are doing great. They have consistent positive trades every day, and started seeing the, adding the year-to-date percentages together, and finally decided to jump in. But what's the point? The point is, I needed to follow the guidelines and follow what they were doing, and do it long enough that I could see the same patterns repeat in the charts day after day, and started building my confidence in this technique. And I have consistent positive trades every day. So,
yeah, I think the neat thing is, again, you guys are only on there for an hour, 5 hours a week. Okay. And to make these kind of returns, and here's something that I thought about after the sessions ended yesterday. You had 18 trades, and normally the session runs about an hour, where you were almost an hour and a half. And I kind of think we shouldn't do those long, because you get all enthused and you're moving and really rocking and rolling, and you made 62.48% in that 1 hour and a half. But then you start getting a little overconfident, and you start thinking different. And so it's good to kind of cut it off and not try to do too much in one day, because some people would sit there all day and they're just not going to be on top of it, trading 4 or 5 or 6 hours a day. That's just not going to be possible, because right now y'all have mastered how to get out of these things quickly for no loss, like we both had, or at least there was an even today, an even on you could even on an Apple, and just be able to get in and get out. Some people would say, and particularly if they do it too often, their brain gets kind of tired. They say, well, I'm just going to wait till I know it's going to go back up. I know it's going to go back up. And then that's when it goes down. And that's when you have these huge losses. So even getting out even is a great sign, So it's Frank again.
Yeah, I think that's a great point. We're focusing so much on charts and other little indicators that we're working on that it just, no one can sustain that kind of focus hour after hour. So you're right. In that first hour, we tend to have the best volatility of the day. Although lately, end of day, last 45 minutes of the sessions have had some very tradable moves as well. But no, I agree.
You want to answer Frank's question there?
Sure. Let's see. Tim, last week's enter position, you stopped watching the charts and only watch the option chain, or you're looking at the stock price or option price? Just the option price. Once I'm in a trade, I am watching that option chain. That gives me the most immediate feedback as to, is this momentum going to continue? Is it going to go out? But also, I've gotten in a habit of setting my limits at 4 cents. I'm getting better at recognizing a move most of our moves last 3 to 5 cents. You can almost set your clock by it. So if I reach that 4 points, I'm out at that limit. I know it's not going to go much further than that. There have been some trades we've made recently where, every once in a while you hit a home run where you get 10 or more cents on a trade. And those just drop so fast. You almost have a vertical line. The tick's almost a vertical line at that point. There's so much distance outside of the Bollinger Band, whether it's a call or put, that that's going to travel. It's going to keep going for a little while. But the longer you do this, you get a feel for how long a momentum is going to last in micro moment trading. And we really find that it seems to be between 3 and 5 cents. But I do keep an eye on the option chain constantly. But let me add one more thing real quick. As soon as I put in my my buy order, I get filled, I immediately put in my sell to close order. So I'm already indicating to the market maker where I want to go out, and that helps him. And I think it's very important. And Tony used to touch on this point a lot, that as soon as you do your buy order, set your sell order.
Is that it?
That's it.
Okay. we talked about this yesterday. When you keep talking about cents, I made 2 cents, 1 cent, 3 cents, 5 cents. That's huge, because remember, our average price of per share here is $1. So if you make a nickel on $1, that's 5%. That's a huge return. That's a huge return in just in a few seconds. And so if you and yesterday we talked about, we had yesterday, not today, but yesterday we had a terrible day. We didn't have hardly any trades at all, and we had one loss and one profit, and we had net 1%. And we said, that's not bad, because if you could get 1% net a day, $2,000, which I use this example all the time with $2,000, turns into, in 2 years, $350,000. If you get just 6% a week, it turns into something like $800,000. So even if you just did one trade, and like if you were following their trades today, surely you could do one and get 1%, because they did 8 and got 26. So it's not something you want to go to the golf club and brag about after you've had a session, and go over there and start playing golf, and somebody says, "How's your trading going?" You say, "I made 2 cents today." I mean, it's not exactly the same thing, So, not exactly the same thing. So,
I mean, maybe you're just at the golf club with the wrong people.
That's true. That's right. You need but people are just thinking sense, right?
Yeah. But you look at what we do, and look at any other investment that you're doing, or you're having a financial planner do for you, and the numbers are so ridiculous. It's funny. I'm disappointed if 1% a day, and I'm disappointed compared to most of our days, but that's still beating out any other investment I have.
Yeah. Oh, well, the lady that was on here earlier, Martha, she may still be around. I don't know how much she when they're doing the seminar, there's a question and answer box there, and you can write questions or give a little report on how you're doing. And our clients that attend these things do fantastic. They absolutely do fantastic. And Martha really does great. She'll say, "Just got 2 cents, just got 6 cents, just got 12 cents," and just goes on. She's just sort of like some kind of dynamo. But and the other people do the same thing, and they're making huge, because again, they're probably averaging $1. Because I know, like Tim had a Tim had a QQQ at 83 cents today, and there was an Apple at 88 cents, and then there was one QQ at $1.04, and one at $1.08, and an Apple at 76 cents. So they say they'll average around $1, probably be pretty safe figure to use, and just make tremendous amount. So, and they're trading. We have a corporate fund the company owns, and it's going to be audited, and they're just starting to trade it. So it'll be probably a few more weeks before we start reporting those funds, but they're going to be audited. I don't know if it's going to be monthly, quarterly, or whatever. And but that way we're not delving into their own private stuff. And anybody sees these returns audited, they're going to go absolutely insane. The other thing we've got coming up, it's in March. I don't know the exact date yet, but we've had one seminar for micro moment trading, a live seminar. It was not online; it was just in person, and it was great. It was in Fort Worth, and Tim wasn't there, but Mike and Tony were, and it was a great seminar. And we'll be announcing it, and really behoove you to come to that seminar. And it's a lot of fun, and we have a big dinner we pay for, and a big cocktail party we pay for, and it's just a good way to meet other people that are doing this. But this time it's also going to be online, so it'll be in person and it'll be online. We've been doing these seminars for 20 years, and when we finally got the capability, engineering capability, we added to the live ones also the online version, and so we're excited about that. That'll be coming up here in March. So
yeah, can't wait.
Here's This is from Joseph. It says, how do you guys know when to wait a few seconds and let the price move, or when to pull the trigger for a small loss or even trade? I don't think I've been able to time my trades as well as I could. Which one of you guys want to answer that?
We both can. Tim, if you want to go first.
Sure. Let's pull the trigger. Yeah, the secret is I'm keeping my eye on the option chain. I'm really in tune to the option chain. I'm looking at the chart. I'm looking at the tick, but the option chain is really what I'm focusing on. And if I start to see that move, I know from experience now when it starts to move, it tends to move twice as fast down as it goes up, and it tends not up. And I don't wait long. Even if the charts indicate that there's a strong, if I'm in a call and it's going down, but the charts are indicating that it's in a strong call, I'm probably not going to wait for it to turn around. I'm going to get out of that, try to get out even or 1 cent or 2 cents, because I can, if that turns around and starts going back up, as it often does, I can jump back in. I'd rather take a round trip fee charge than, lose 5 cents. It's much more expensive for me to lose 5 cents than it is to pay another round trip fee to do the trade again. So, and I think this is it's all just experience. You get a feel for the acceleration rate in the option chain and also the deceleration rate in the option chain. And I know that if it's going up and it's not quite reaching that 3 or 4 cents, which it normally does, and it pauses, I'll wait a beat and I'll pull that trade. I'll go ahead and get out. Hopefully, just take a couple of cent profit, then waiting, thinking it's going to continue up, because it rarely does. And that's kind of where I do
it. Micah?
Yeah, I would agree. There's not much of a, especially on the loss side, there's not much at all. The ideal position to enter is as we're heading into the momentum. It's very close to the beginning, as close to the beginning as possible, but it's as it starts to move in that direction and as it picks up speed, you want to fill in on the way. In fact, we used to talk a lot about, before we changed to the matrix, when we were doing order tickets, we would talk about leading it. So we would have an order ticket, and our limit would be we'd be following it, but it would be a couple cents past where it actually is, so that when we saw it really start to take, we would send that limit through 2 or 3 cents ahead, and then as it continues up, it fills us, and then continues to move. So I mean, that's the ideal trade. Of course, it always doesn't work out that way, but but it doesn't take much. I mean, it doesn't even have to go down for us to pull a lot of the time. If it even just pauses, usually we're out. Deshaun asks, Martha, how long would you say your average trade is? It's a good question.
Yeah, Martha, you want to answer that? Thanks for the question, Deshaun. Martha, I know you're here. You want to come back on and answer that? How long your average trade? There's Martha. She says, thanks, Deshaun. I lost huge in the beginning, so I'm going smaller now and learning. You're doing great, too. I haven't looked at SPY yet, but need to.
Oh, that must have been earlier.
Yeah. So
there we go.
Yeah. Hi, Deshaun. It depends, but it can be 15 seconds to 2 minutes against the rules. Yeah, well, probably 2 minutes is not. I think that's an awful long time, and I think most of these guys get in and out much quicker than they say that they do. It seems like I hear them do it, and it seems like they're in there 15, 20 seconds. They'll come back and say, I was in that for a minute or 45 seconds or something like that. So
yeah, I'm not in long. In fact, it's shorter and shorter. Unless that tick is extremely vertical, I'm not in long, and I'll bet that most of my trades are average 15, 20 seconds.
Yeah.
I had a 50-second one today, 56 seconds, 54. Yeah.
Tim,
it's about the range.
Tim, you're not going to believe what Mike and I were talking about this morning.
What's that?
Or maybe it was yesterday. I don't know when it was, but Micah, he's come to the conclusion that most of his life is wasting away because he only works at this, about an hour a day, and then he doesn't have anything else to do the rest of the day, so he has to go out, and try to find something to do. So I guess he's going to maybe get him another job. Michael, this is
I'm accepting resumes. How does that work?
I told you, I said that's what
first resumes.
Everybody my age and Tim's age. I mean, shoot, that'd be the ideal job. You come and work for an hour, 30 minutes, 5 hours a week.
That's right.
Yeah,
that's right. I spent 35 years, almost 40 years, working in television, working 8 to 12 hours a day. Believe me, I'm happy to work 1 hour a day.
Absolutely. Absolutely.
See, that's where I came from, though. I mean, when I moved out through that summer, I had 4 jobs, probably averaged 85 hours a week working. I would wake up, go to a coffee shop, get off, go to a different coffee shop. Sometimes I was kind of in between two, or I just work all day at the coffee shop. But usually coffee shop in the morning, then I would get off and go roofing, and then I would get off that and go to the restaurant. And bus tables all the way up until I was a bartender, and then some days the 4th job would hit on the weekend, Saturday, Sunday, when one of them was off, I'd make sure I had to fill in. So the longest I ever got to, I remember there was a period of it was 185 days with no days off. And that's what I did. And they were all, the shortest day I had in that span was 11 hours, up to 11 to 20 hours for 180 days straight. That's just
Mike, now I know why I started getting all those emails from you saying, Joe, hey, can you think anything I can do? For people out there, Mike's been with us a long time, since he was probably about 16 or 17. We met him on a CSE cruise down in the Caribbean, he and his brother. And so we've known him, but he was in school, and he finally got out of school. And but all of a sudden I started getting these emails. Like all of a sudden he'd come back to life. I couldn't figure it out. So one day I emailed back, but I think we got it. And he'd not done micro moment either. He was like Tim. And so, he's 21 now, How did you get a bartender before you got to be 21?
Montana laws are different. It's 18 in Montana.
Oh, really?
Yeah. 18 to pour.
Yeah. Okay.
Nice.
Okay.
Well, Mike, you're so smart. I mean, you're brilliant. You should look at something more like quantum physics as a hobby.
I'm gonna build rockets.
Yeah.
Well, hey,
yeah.
If there's any rocket specialists, email me at micah@micromomenttrading.com.
Now, plug
an internship.
Yeah, plug for Micah. He does handle all of our social, what do you call it? Social media stuff.
Social media.
Yeah. And so why don't you tell them about that? Because somebody may want to tune into that stuff, Micah.
Yeah, social media. We just got it up and rolling. We're doing pretty much primarily just what I call snapshots. We're up to episode 14 now. They're spread between Facebook and LinkedIn. On LinkedIn, we're Micro Moment Trading LLC. And on Facebook, we are Micro Moment Trading. We're on Instagram as well, but all you really see of the webinars is the same screen. So there's not really, much opportunity for Instagram type content. So for now, it's just Facebook and LinkedIn videos. Really good stuff. I mean, obviously it's all free and it's just extra content. I cut segments that are anywhere from 20 seconds to 3 minutes long of Frankly Fridays, when we're talking with our clients, when we make a trade, different things like that, and I just pull it out and stick it in its own separate video, kind of give a little description of what it's about. And there's some really good stuff in there.
Yeah, and you can always go to YouTube and put in Micro Moment Trading, and we have complete sessions. Like the session yesterday that had all the 18 trades and 62%, whatever it was, 62% return, that is on there. And from the time it starts to the time it ends, so you can actually see what a session is. You can get a good idea if you subscribe to the service, what you're in for. And there's a number of the sessions on there. There's not just one. We try to keep them updated all the time. But so you can just see a whole session. It's old, so it's not going to do you get the trade, or we wouldn't be putting it on there. But you certainly learn how you could benefit from the service. So okay. Yeah. We'll check, see if anybody any more questions. If not, we'll kind of call it a day. Or comments or anything. There's Martha again. Thanks so much to you, Joe, Micah, and Tim. You guys have changed my life and given me the opportunity to great success. So we're so glad of that, and you're doing so good, Martha. I mean, you really, really do. Yeah. So, well, yeah. And then she says we should have a MMT cruise. We will. We're going to. We've had any number of cruises, everything from the Hawaiian Islands. It was a 7-day cruise out there going between the islands to one we did. Everybody flew into Barcelona, and we had over in the Mediterranean for over a week. Fantastic cruise, and we've done down in the Caribbean a lot. And so we will. Yep, we will.
Sounds nice.
Okay. Well, guys, thanks for being here, and we'll see y'all in the morning.
All right.
Awesome.
And Mike can go find a job.
Yeah. Will do.
See you
Email
later.
me, guys. Hit me up.
Take care, everybody.
Bye-bye. Thank you, Marcus.